Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. This is Nick. It is June the 8th. It is 6 p.m. EST. We're going to take a look at some charts today, in particular the NASDAQ, Bitcoin, EURUSD, USDCAD, AUDUSD, gold, and silver. And we're going to take a look at some of the trades that I see possibly coming the rest of this week. Tricky week last week. We'll talk about that as well. In the meantime, we have a freebie for you. Take a look in the description. There is a link. That link takes you to a free algo. Okay, I build an algo right there before your eyes. It takes about 10 or 15 minutes. I turn it into code using Grok, and then I show you the tools that traders use to connect that algo to the broker so it can trade for them while they're not sitting at the computer. They might be golfing, sleeping, whatever. Now, you do have to optimize that algo before you trade it, but we teach you how to do that over at algofactory.tech, so come join us. Also, about 60% of you who watch this don't subscribe. Please do so. We work hard on these reports, and we give out a lot of great data, so support us by subscribing, thumbs up, comments, all that stuff. Now, I'm going to talk a little bit about what happened on Friday. Very briefly, we just basically had a market meltdown, okay? We had the NASDAQ go from all-time highs on Wednesday, and it went down 5.3-ish%. Now, that is almost a 4 sigma event. It was a 3 sigma event pushing a 4. Now, what that means, when you have markets move that much in one session, you're looking at an event that is about a 0.2% chance of happening. I do believe it was engineered. I think most of the markets are, and I think a lot of retail got hurt in that process. But understand that if it had gone much farther, we would have seen a structural problem in the market. So once you start getting past 5% into like the 6 or 7% in one session, when you see moves in the indices like that, usually that means we're in trouble, and they cut it off right before that. So we're going to dig into that a little bit on the charts here in a minute. But before that, we're going to take a look at some of the data this week. We have some exciting data coming out that could give us a lot of volatility to trade, and that's going to happen over at forexfactory.com. So here we are, forexfactory.com. Not any news on Monday. That was today. Tuesday, not really news. Wednesday's a big day though, 8:30 a.m. EST. We have the CPI data come out for the US, and that is massive. Okay, that's going to be what a lot of eyes are looking at because we had that big market meltdown on Friday. It did get caught and it's coming back a little bit. We'll talk about that in a minute, but understand that a lot of eyes are on the CPI because if the CPI comes out as a cool print, if it's showing disinflation, a lack of new inflation, that might justify in the minds of certain individuals the possibility of a Fed rate cut coming. And if that's the case, then money will flow out of the dollar into the markets. And that could just erase a lot of the damage that we saw on Friday, right? Now they're going to give you, Iran this and Trump that and Lebanon and Israel. Okay, fine. Those might be reasons or at least excuses why the market fell. These might be reasons or excuses why the market comes up. And what's in particularly key here is you have month over month and year over year. They're doing annual CPI here. So big deal. Also Canadian data. If you're trading the loonie, we have their Bank of Canada rate statement overnight rate press conference. That's a big deal. It's like our FOMC. And that happens at 9:45 a.m. EST with the press conference at 10:30 a.m. EST. Moving to Thursday, another big day we have at 8:15 a.m. EST is the European main refinancing rate. Again, that's their version of the FOMC. So if you're trading the euro or anything euro related like the DAX, that really can't affect the charts. And then we'll see at 8:30 a.m. EST the PPI, which is, it's just month over month, but it is an inflation metric and it is important and it could add volatility to the markets. And we like volatility. 8:45 a.m. we have the ECB press conference. I probably would avoid touching the euro until at least after, it's hard to say, 9:30. Just depends on how quickly the data is digested, whether or not the data is a big deal. When that press conference is over is when I might be interested in looking at trading the euro. And then the next morning, EST, at about 2 a.m., we have the British gross domestic product data that will affect the pound, maybe the FTSE, other related markets. And that's pretty much it. There is some data coming out Friday. It's not marked as a heavy event, but the University of Michigan consumer sentiment is happening at 10 a.m. and that can affect the charts as well. Speaking of the charts, let's go and jump in and take a look at the NASDAQ. So we had this up earlier. We had the big move on Friday. Friday alone, the market melted down. It was just under 5% all said and done. Okay. Now it has come back since that meltdown. It was up as much as 3% and it ended up going up by about 2% on the day. Now, Usually Friday lows get retested, so I would not be surprised to see this maybe pop up a little bit, but as I drew it is what I expect, right? So you have an upper bound right now locally of 29,758. If price goes above that, it could shoot up pretty high, but I expect it to either not get set on there or maybe poke up and then head back down to retest this low, which that low is actually right at about 28,765. Now, it might not hit that exactly, but that's what I expect to see is a retest of that low. I could be wrong. We do see a lot of V-shaped recoveries in these stock markets, but this particular move was so drastic, I'm not sure if we're going to see it right away. We might see it pop up by next week. If all the money floods in this week, that's great. We'll just ride that as it happens, but I expect sideways action and down. I did make a contingency though, because that CPI, PPI data might push those markets up or down. The lower bound is pretty deep. That's down at 26,883, which is, I believe, the October of 2025 highs. But that would be kind of an extreme case, but it could happen. It absolutely could happen. We saw basically the same thing happen on Friday. So, really this week is going to be a bit unpredictable, but if I had to bet, it's just as I drew it, right? Maybe it'll bounce off a couple of times. Maybe it'll retest sooner, but I expect range price action as you see it right here until further notice. And if one of those CPI, PPI are way different than the estimate, then of course we could get that surprise. The NASDAQ trade, I would look to go long probably at roughly 28,763. I'd long that. That's what I would do. I would take a long right there. Now, what the stop loss looks like, whether I take it, that's going to be determined by what happens at that time. Now, if I could determine there's a top up here at 29,751, I would consider that. But all of these trades I would not take until after the CPI at least, and probably after PPI, but definitely after CPI. That's when I would start to look at that maybe on late Wednesday, something along those lines, let it run the rest of the week. Now, if price makes its way all the way up to 29,751, I also would consider taking a short as long as it's after that CPI, or if I take it before the CPI, it would be protected. I would be managing that trade. And if the CPI were to come out, or even the PPI, I would protect those trades. Let's take a look at Bitcoin. Bitcoin making its way down. This orange area is a liquidity zone. Now, I think it is going to grind up, but I don't think it's going to go past the top of this zone, which is basically 68,300. And I think sooner or later it will break below 60,000, retest and break that low of 59,000, and probably make its way down to test this sort of purplish area. Now, it might wag around in here, and the top of that purple area is 56,200. And why it matters is it's an old zone where there's no liquidity. Price needs liquidity. So there's a really good chance that before it breaks down further, and I do expect it to break down further, before it does that, it may run up to grab some more liquidity at that orange area and then perhaps break down after that. I think that's not going to happen this week, so I'm not that concerned about it. Right now, I just expect Bitcoin to kind of grind up with some pullbacks and eventually start to fall. And it could happen sooner or later. This surprise move up would only happen with, I think, the PPI, CPI surprise if they are surprises. And even so, I don't expect it to go past maybe 74,000 at best. And I really don't expect it to go truly past 68,000. So, okay, at this point, there's not a lot of obvious structure. This is not a very pretty penny to trade. I'll definitely scalp it. I'm good at that. But if I were just to look for like higher time frame trades, I might consider if price very soon makes it down to this 59,000 level, I would consider taking a long, and I'd take it maybe up to about 65,000. That would be a trade I might take. And it would have to be they'd have to make it down there pretty soon. And of course, how I took that trade would depend on what price is doing at that time, what the algos say at that time. Is it okay to take a long? I prefer to take longs in the direction of price. So if price did kind of continue up, then I might snap some of these longs out here, but that's really hard to kind of talk about on this video. Those are swing trades. So they must be done at structure, things like that. They tend to be much more organized than a day trade. Let's go over to the euro. Okay, so the euro and a lot of currencies took a hard hit on Friday along with the NASDAQ. Now, I do expect the NASDAQ to come back a bit. So if the euro revisited this level at 114,992, which is down here, this low, I would consider taking along there. Like I always say, it depends on what price is doing. And if I took that trade before the CPI or PPI, I would be managing that very carefully. I would be out of that trade by about 115.86, the top of that green square. Now, if price made its way all the way back up here, I don't think it will. But if it did, I would look to short at this top bound of 116,470, right? That would be what I would consider as a trade, depending on the whole picture, what the algos are doing, what's happening with the news and all. And I would be out of that trade by 115,616, the bottom of that green box. In the meantime, what do I expect to happen? Sure, it could make its way up there, but I expect sideways and grinding, right? And if that sideways and grind does continue to look very sideways and grindy, I would also consider taking a short right at this local structure right there, which is at 115,556. And I would short if it did try to breach that and couldn't. I would short right there and take some profit here, probably right about 115,093. So lots of options here, and it's gonna matter, especially if we can see a range. Might have to end up playing that range. You have CPI, PPI, positions must be protected. These data can change everything in a moment's notice, but until then, that's what I see. Let's take a look at USDCAD. Pretty simple for me on this one. It's bullish. It has a high time frame top here at about 139.67 and a local top right here at 139.61. So if price were to head up there, that might be where I get out of a trade, but I do expect it to pull back a little bit, maybe this far, maybe not. And I might take a long as price approaches this blue line. And that blue line, as I will denote here with this arrow, is 139.24. As price approaches that, if it can, I would consider taking a long. Doesn't even have to touch it. It just has to approach it, flip back around. I might take that long, and then I probably would be out before that blue line. So maybe I'd be out by 139.64. Okay, that's probably the most likely trade I would take. Otherwise, I look for a breakout and grab that long on top of that 139.67, right? And we'll look for a trade like this. And I probably would use fib extensions. So if I did play that, I can tell you what that might look like. Give me just a moment. So I would be out of this trade by about 141.87, the top of that green box. So those are the two plays I would look at because this pair is rather bullish at the moment. That's USDCAD. Let's take a look at the Aussie. AUDUSD on the other side, pretty bearish. I would look at this point for two shorts on this. And again, this can change, blah, 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 blah. But I would look for this to either run up to here if it could, which is at 77.92, grab a short and head down. And I could give you some targets on that in a minute. Or I would let price go below this local low right here, which is at 70244, and grab the pullback on that. So both of these are shorts. Here's the short, the pullback. Here's the short based on the higher play. The short based on the pullback, both of these would have the same targets, actually, I think. I'll have to check on this, but the target to exit would be about 69.574. Okay, that's dollar to Aussie. Whether I take the higher trade up here or I take the deeper pullback trade, which would have probably a tighter stop, but those are both pretty valid right there. CPI, PPI would cause me to have to protect positions or wait until that news came out to take those, depending on when I was looking at this, right? But that's the call. But I do think we'll see price approach this lower bound towards the end of the week, possibly. Depends on how bearish everything is in the NASDAQ. Depends on a lot of things, CPI, PPI. But the lower bound here is 68311. I'd be out of any shorts by then, probably long before then. Let's take a look at gold and silver. Both pretty bearish. We're looking at gold, probably looking to bottom crawl around this 42.64 area. I've been bearish on this for weeks now, and I was correct, as you can see. So it's just bearish. Now it's probably going to flip back around later, but for the moment, it is bearish. That is the case. Demand is still pretty good on the street, apparently, but it's not going to stop the price from coming back. It was a monster run last year. And as I say every week, gravity does take effect eventually. We're seeing that now. The lower bound locally on this is this blue line, 4263. The lower bound deeper is going to be 4099, this blue line that we see right there. So what I would do is possibly look to long right here. We could get a bounce right at this blue line here. And again, CPI, PPI, protect your trades, etc. I'd be out of that by 4410. And then if price were to break down, then of course I might take that breakout short down here and I'd be out by about 4112. Now, interestingly, might be able to see an opportunity if price makes its way up. I don't think it's going to make it up to this level here, this 45.15. If it can make it up there, that's a great short. I just don't think we're going to see it. I don't think price will come back to here, but it's possible. But I'm not even going to leave that on here. I think that's just not going to happen. So quick long here at this level, 42.64 might be like a nice move, but be very careful with that. And CPI, PPI, protect your trades, anything can happen. Let's take a look at silver. Silver, I think, is just like gold. It's going to grind downwards and ultimately further down, I think. So I'm looking at a lower bound at $61. And right now, the local low is at $65, actually $66. So price, if it breaks below that, I would be looking for a breakout short to the downside on that. And I'd be out by probably, what, 61.50 or something along those lines. If one does want to risk along here at that line, that's not the worst deal. If you're quick, maybe like a day trade, if you're quick in the draw, if you get the right entry, you have to make sure you have a nice entry. Not going to be a lot of meat on that bone, but if you're a day trader, there it is for you. It is right there. Those are all the charts, and this is what we do at Algo Factory, right? We determine to a statistical degree of accuracy where price is going to go, when it's going to get there, and we use that data to extract money from these markets on a regular basis. We teach people how to do that over at algofactory.tech, so you can come learn how to trade like a hedge fund pro. And if you want to get a preview to that, go into the description. There is a free algo. Click that. It's a quick video, shows you how to build the algo, turn it into code, connect it to brokers using tools that professional traders use. Once you have optimized, you do have to optimize it first, and we teach you how to do that at algofactory.tech. We are live Tuesday, Wednesday, Thursday, 8:30 a.m. EST. It's an hour before the market open. So come on in and check that out, and we will get started with our day. We'll look at these charts. We'll see how they're behaving, and we'll make our game plan. Thank you all for watching. We will see you Tuesday, 8:30 a.m. EST sharp. Happy hunting.